Hi traders, and welcome to my video on the advanced decline line indicator. In this video I'm going to show you how you can use the indicator to capture moves like this one for around 500 pips. Okay, so this is the MT4 trading platform, MetaTrader 4. I have a pound-dollar 1 hour chart open here. I have the indicator displayed below the chart here. I downloaded it for free online. If you don't already have it included within your trading platform, you can probably find it. Okay, I'm just going to run through in this video the various ways in which you can implement it within your trading, and you'll find things that you can integrate within your own trading strategy. And a quick tip, you don't necessarily need this indicator to capture good trends like this one, but we will get into that. So as I said, this is a 1 hour chart. I prefer longer term chart time frames such as the 1 hour, 4 hour, daily, weekly, and monthly, and that is because they contain more price data, and therefore I find the signals to be more reliable. That applies whether using this indicator or any other technical indicator for price action analysis, support resistance, trend lines, candlestick patterns, so on and so forth. Okay, but you can use any time frame and any trading instrument for that matter, whether that's Forex, cryptos, stocks, commodities, indices, bonds, etc. So the indicator you can see here, as I said, the first thing I'm going to do is I'm going to draw my resistance and my support. Okay, you can see a nice wedge formation there. And what we're going to do in this instance is we will wait for a breakout to the downside, which is exactly what we got there. The signal of a bearish reversal. The market is making these lower highs. If we hone in the more shorter time frame, you can see there lower highs. Okay, and actually a nice breakout below this support line here. So that was the initial breakout. Had a pullback. So we could have traded the initial breakout. It would have been an aggressive trade. You do have an M chart pattern formation there. A triple top as well. This is a triple top formation, which is when the resistance is touched at least 3 times. As you can see, it is there. And then we just look for a breakout of support to the downside, which first happens there. We have a pullback, support becomes resistance, and another breakout of this support line here. Pure price action trading, and we could have been in this trend right at the beginning. Had we have taken this breakout on the pullback here, could have placed our stop loss above the high, so you're looking only 20 pips. Very tight for the 1 hour time frame, so that's great. And a profit potential of over 450 pips. Okay, what we could have done on the way down is just move stop loss from the initial point. I definitely wouldn't leave it there. Once the price is dropping, I'm going to move my stop loss to first break even. Okay, maybe after this move here, stop loss at break even. As the price falls again, stop loss above the highs, above the high, above the high, above the high, above the high, above the high. Just lock in the trade as much as possible, okay, until we see the market starts to make higher lows. Then we might consider closing part, if not all of the position. And you can, of course, close part of the position on the way down. If you did miss the initial trade there, doesn't matter. You will have other opportunities, and perhaps you deliberately missed it because you want to wait for a trend confirmation and then a pullback. You can do that. Another M pattern formation there and a big breakout to the downside. You can see there's probably lots of traders watching this level. In fact, that support line goes back as far as there, so we know it's a strong level of support. We have our lower highs. Okay, nice wedge formation there. The signs were clear. Lots of bearish candlestick patterns there to signal confirmation. 3 inside down pattern there. Okay, so lots of indications for this trade here. In fact, even there was a breakout, initial breakout, support then becomes resistance. You can see a strong level of support, of resistance in there as well. Price consolidates within the zone and a big breakout, no coincidence, to the downside there. And that would have been a good entry as well. And you can see throughout this trend, you know, as long as the market's making these lower highs, you'll find ample opportunities to enter on a breakout. Another good one there. Perhaps you were honed in more, you could have entered earlier there. Okay, wedge pattern again. It's literally a carbon copy of the trade up here. Ample opportunity to enter on this downtrend. What you don't want to do is you don't want to sell too low at the end. Okay, if you get one good entry earlier on, you can ride it as much as possible, even with a tight stop loss of say 20 pips on average, maybe 15 pips sometimes, depending on where the high or the low is, or 20 pips, 25 pips. Regardless, if we have an average of, let's say, 20 pips profit stop, 20 pips stop loss, if it gets taken out 3 times and we're down 60 pips, but we capture moves like this for 400 plus pips, we can make back those losses and then some, just emphasizing the importance of money management. Gone off on a complete tangent here. I'm about to cover the advanced decline indicator now. I just wanted to emphasize the fact that you do not need to rely on unicorns or crystal ball indicators for good trading strategies. You can use price action. I prefer price action because it tells you what the market is doing at any given time rather than perhaps lagging or repainting, which means changing after the fact. Okay, so the advanced decline line indicator. Well, if we just look at this particular trend that we've just analyzed, okay, how would we use it in this instance? Well, the first thing, I'll cover the elements to it. So you've got lower highs, okay? So when the indicator is making lower highs, it suggests a downtrend. You can see there, lower highs, lower high, downtrend, okay? Just as for an uptrend, if it's making higher lows, where are we? If it's making higher lows, okay? Higher lows, uptrend, okay? Although I would say that's nothing that you can't do yourself, okay? You can draw your higher lows and you can draw your lower highs, as we already have here. Okay, so the indicator for me doesn't really have any advantage in terms of that. You can do it yourself. Okay, maybe you like the visual representation of indicators, that's absolutely fine as well. Okay, so that's one aspect of it. The other aspect is the higher it is, the more chance there is of the market being overbought. So for example, if you're thinking of buying here after this big move up and you look at the indicator and it's at a peak, you might consider that the market's perhaps overbought. You just wait for this pullback, okay, and then enter on a breakout of the resistance from the pullback. Okay, the same thing here. You might not want to sell when it's down the bottom here, even here. You know, it can prevent you from selling after big moves. You don't want to sell at the bottom or buy at the top. Okay, when it's really low, you might not want to sell. So it can prevent you from actually taking certain trades. But again, you can just look at your chart, see that big drop there, and you're going to be like, well, I don't want to sell at the bottom. I don't want to sell at the bottom of that drop. I'm going to wait for a pullback first, then look to enter either on the pullback itself or on a breakout of support in a downtrend or resistance in an uptrend. So that's the second element, overbought and oversold, of the advanced decline indicator to consider. Okay, and also it can be used for finding pullbacks, okay, because we know we're in a downtrend here, okay, downtrend, and we're going to look to trade in line with the trend. We're only going to take sell trades once we know we're in a downtrend, so we can wait for the indicator to turn to the upside, okay, and when it does that, as it does here, okay, you can see downtrend goes to the upside. We know that there's been a pullback, so we can look at our chart here, and this is a pullback. All right, and then that's when we can start looking to enter into the sell trade. Just need to time our entry, and then once the indicator turns back down, okay, this is when we can start either looking to enter there, or as I said, draw a support level and enter on the breakout there. Okay, so that's another way you can use it. Same in an uptrend. Okay, we know we're in an uptrend here. Have a pullback, a big deeper pullback, just because that move was so big there. And then as it turns back to the upside, we can look to perhaps take an entry trade there. Although personally, I would prefer to just be looking at the chart and drawing resistance to trade that way. Because when we draw resistance on the chart, I think it encourages good habits. Draw resistance there. You see that resistance after it's breached becomes support, and then the support holds up here. So even entry opportunities on the pullback there and there. Okay. So they're the main elements that I would take from the indicator and the way in which I would look to trade with it personally. However, I don't think it's something that you can't do by looking at the charts yourself and just putting a bit of effort into drawing these lines. Okay. As important as time and entry is the money management, which we've covered. if we cover it for the buy example as well, let's just say you bought on this breakout here. Okay, I'd have my stop loss below the low there, and then just as price moves up, I'll just try and move it below the low, below the low, below the low, and just try and maximize the move as much as possible. Okay, what we don't want to do is, you know, have a 20 pip stop loss and take 20 pips, take profit, because it just makes our life hard. You know, what if we can capture hundreds of pips? Why would we leave so much on the table? If you do exit prematurely, of course, you can re-enter. You know, let's just say you saw this big drop here, you panicked and you exited here, even though you were in this position. You could have, in fact, you know, rode it all the way down to here. You would have had another opportunity or a few opportunities to re-enter on this trend, like here and here, even as far down as here, with being cautious that you don't end up selling at the low point. I mean, even here, some may argue. So ample opportunities to trade with the trend. Okay, of course you need to have good discipline. Okay, so don't let fear, anger, and greed cloud your trading decisions. Don't revenge trade, which basically if you have a loss, get angry and just take a trade for no reason at all. Don't force trades that aren't there, so avoid over trading. Don't FOMO, which is fear of missing out. You know, I have to take this trade or I'm going to miss out on the trend. You can get caught in a bear trap or a bull trap. If you do that, for example, here, we have this downwards move. This downwards move here, traders are probably trying to sell down here at the low. Whereas those who were in earlier were probably taking their profits. So what happened is profits were taken. Okay, those who sold there had stop losses around here, which just caused this shift of momentum to the upside. Okay. Hopefully you found something useful in this video that you can implement within your trading strategy. If you could like and subscribe, that'd be great and help my channel. Appreciate you watching, and I hope to catch you on the next one. Take care.